So this is our second tutorial on calculating value drivers. In this tutorial, we're going to calculate the dividend payout ratio. And what the dividend payout ratio is the percentage of a company's net income that they pay to shareholders each year. This comes either as dividends, right, as dividend payout ratio, the name would indicate, or as repurchase of shares. And luckily for us, we don't need to differentiate between the two of those in those calculations. So Hershey's here we can see their net income. And net income, that bottom line number, goes to one of two places. It's either given to shareholders or the companies keep it, right? They give it to their shareholders or they don't. And if they do, it goes as dividend or share repurchases. And if they don't, it keeps it, the company keeps it, and they keep track of how much of it they keep by adding it to retained earnings on the balance sheet. So what we need to know in order to figure out what dividends they pay out, we need to know how much retained earnings they kept in the year. So we can use this number, retained earnings, because it's an accumulated number, to figure out what portion of that income was kept. We then can use subtraction to figure out what portion was given away. So to start, I'm going to add 3 rows. And I'm going to call these 3 rows addition to retained earnings, dividends paid, and dividend payout ratio. They want to hang out and be bold because that's how net income was, but I don't want them bold. I'm going to italicize them, make them non-bold, and scoot them over. And I do that because it'll help me remember when I glance at this that this is something that I've added. So I'm going to hide a couple of rows so that we can focus only on what we need to see, which is the shareholders' equity section of the balance sheet. Right click and then hide. And then these bright blue colors indicate that something's hidden. And net income. So in 2011, net income was $628,000. And at the end of 2011, they put some money in retained earnings and paid some as dividends, right? So at the end of 2012, net income was $660,000. They put some amount in retained earnings, and they kept some, and they paid some as dividends. So to know what they added to retained earnings, I need to look down here at accumulated retained earnings. They started the year with $4.7 million in retained earnings and ended the year with $5.02 million. The difference between that is how much they added. They added $319,000. Well, if net income only goes to 2 places, retained earnings and dividends, we can deduce then by subtracting that $341,000 of that went to paying dividends. I don't want this bold. Okay. So if I know that of the $660,000 that they made, they paid $341,000 as dividends, I can just calculate that as a percentage. The dividends that they're paying divided by their net income is not $1. It's 51.6%. And that's the number that's relevant to me. The ratio of dividends that they paid out, their dividend payout ratio, 51.6%. 51.6% of their net income was paid to shareholders as either dividends or share repurchases, but we combine them together to call them dividend payout ratio. So let's take a look at 2011. In 2011, they ended the year with $4.7 million in retained earnings. And that was a $333,000 addition from the year over. So of this $628,000, they got to the number $4.7 million in retained earnings in 2011 by adding retained earnings out of net income. the remaining net income, that $295,788, went to pay dividends to shareholders. So the amount that was paid to shareholders is not $0, but instead it's 47%. So our dividend payout ratio is equal to dividends paid divided by net income. And when we're creating pro forma statements, we want to know how much money our firm is paying to shareholders. By knowing that, we can estimate how much they're adding to retained earnings, and that'll help us know about the assets, the shareholders' equity, the shareholders' equity on our income statement, on our balance sheet. I'm having a good day. All right, so our value driver, when we're going to forecast our dividend payout ratio, we're going to put the value driver here. And we know that it was 47% paid out in one year, 51.6% paid out in the other. We're just going to call it the average of these two. We're going to say, all right, on average, we're going to guess that Hershey's is going to pay out about 49.3% of their income as dividends. And so for type here, we're going to put percent of net income, because we think that 49.3% of net income is going to be paid as dividends. And by knowing that, it's going to help us forecast dividends paid and how much we want to add to retained earnings in each year of our forecast period. Okay, happy calculating. Let me know if you have any questions.